The following is a presentation of TFNN. It is now time for the Diagnostic Trading Hour with your host, Darrell Martin. Call now, toll free at 1-877-927-6648. Internationally at 727-445-1044. Now, Darrell Martin.
All right, folks, come on back here to the Diagnostic Trading Hour. Hope you're doing great today. Let's check out several markets, see where everything's at right now. And right now we got the S&P. It's up 7 points. We have the Russell up 4. The Nasdaq is up 42, and the Dow is up 57. Natural gas currently, or actually copper right now, we're looking at that, is currently up about 0.33. We got gold is down just a couple points. We got silver pretty flat on the day. Looking over at natural gas, it is down pretty large, almost a 2% move. We got oil flying on down $1.50 on the day right now. Corn is currently up $7.25. We also looking over at soybeans. It is up $23 on the day. Euro dollar is up 30. Aussie dollar is down 18 pips. We got the pound dollar down 20. And the dollar franc down 14 with the dollar CAD down 26. U.S. yen is up 31. Aussie yen is up 6. Euro yen is up 69. Pound yen is up 21. And euro pound is up 32 pips on the day. All right. So that gives us a quick summary on where all the markets are at. And we had a little bit of news. We talked about that. So we'll go into some of those pieces and put them all together. And let's see what we got right now. Let's see here. And what we're also going in is looking at one other piece on the news. And I'm going to pull something up. And okay, so I want to pull up the numbers from last night and go through those. And let me just get a new chart up for you. And so we got, let's get a new clean chart, pretty much nothing on it. And again, I'm using the Ninja platform on this one right here. So we'll go and we'll look at the pound dollar and open that on up. All right, so looking at where the pound dollar is located right now and where it was from last night, and just checking out again the news, the impact the news had. I was really looking more for an iron condor potential play out on this. Really doesn't seem to have a consistent massive move. We also had the Aussie Dollar one. We'll look at that one from last night. Sort of a similar thing going on there. And Aussie Dollar really wasn't priced right to pull off an iron condor or a strangle or straddle last night, so I wasn't able to get either one of those. I did a couple plays afterwards, but wasn't able to pull off the iron condor or straddle strangle on the trade, just based on the price. It was like too much just right in the middle. And so let's see here. Let me add on our deviations and deviation levels. And now let's check out the move. So right here, we have the news come on out, the release to low at 7. Okay, so pretty much is right here. About 30 pips on the day. So we had about a 30 pip move right there. If you would have brought in at least 30 and ideally 40 or 50 on this trade was really the goal, then you should have been fine. Sorry, I'm just sneezing like crazy. Should have been fine on that trade. Really was looking to get in earlier in the day as well. So if we measure, hey, what happens if you got in, say, at midnight? What was the low move to 7? On that, it was 28 pips. It's about the same thing. Usually we don't... by getting in earlier, you're able to get more premium, and so it helps you maximize that iron condor's payout. Also, sometimes now, if we're doing straddles, if it moves a lot, we a lot of times may not want to get in we'll want to get in early if it moves, like starts really moving before the news announcement. In this case, did not have a big expectation to move. Was looking at Iron Condor. Iron Condor worked out perfectly, as I called out looking at for the news trade yesterday. And the Aussie Dollar, let's go look at that one. So they had their interest rate announcement last night. And big move this morning right there to some big trends. So let's go look at the interest rate and how that played out. And so as we can see over here, right here, we had a move basically from pre-release. We went up to a high, just a big spike right there, about 25 pips right there. And then the release to the low, if we get that, we had about 25. So if you would have got around $40, you should have been fine on that. What about a release to expiration? So let's say you hopped in and let's say you picked the, let me grab my crosshair. There we go. So let's say you hopped in and you picked the 10 o'clock expiration. I mean, it would have basically expired like right there, right here. Been about 19 pips off. So if you would have got $30 or $40, which the price was about, I want to say, right around $30 for an Iron Condor, about $30 for a straddle. Okay? So if you would have done an Iron Condor, you basically would have been, maybe not even 30, maybe 25 to 30. You would have been pretty close to break even, a small profit on a Iron Condor. On a straddle or strangle, you would have lost on that trading, and we didn't expect that big move. Now let's go over. Let's check out the Euro Dollar from this morning with the ISM release. So again, last night we had the Aussie Dollar. They had the interest rate announcement. No big change was expected. No big move really happened. We had the manufacturing PMI. That number came out. It was a little worse than expected. Came in at 55.7 versus 56.7. And then this morning we had the ISM manufacturing PMI. It was released at 10 a.m. The expectation was 54.2. We had a 53.7 release. And really did not have any big expectations on movement. Was looking to get in right around 9 for an 11 o'clock expiration. Was figuring somewhere between $30 to $40 on Euro Dollar should be acceptable. Let's go check that one out. So our open to low here, we got 9 pips. Okay, our open 9 o'clock here to the high. Between that and 11, we got 11 pips. So our open to our close. Right over here, we go all the way to 11. Let's see, right down here. Okay, about 5 pips. So you should have definitely brought in a solid $25 to $35 per Iron Condor that you did. I mean, you could have did 1 or 50 or whatever. But, so great, simple, easy trade on the ISM manufacturing PMI, knocking it, again, right out of the park. So now if you haven't done these trades, okay, if you don't know what I'm talking about, you need to hop on over to TFNN.com and click on the Nadex banner over on the right side of the page. Okay? So on the right side of the page, you'll see a Nadex banner. Click on that and click on Trading and Demo Trading Account. It's a good place for you to get started. Okay? And so once you click on that, you can fill in your username, your first name, last name, phone number, email address. Click Apply for Demo. After you've done that, check your email. You'll get a password, and you'll be able to log right in. So this is free, costs nothing, no credit card, just username, first name, last name, phone number, email address. And they'll send you a password, and you can log in right up here at the top. With the demo account, you're going to check this demo account box, and then you're just going to put in your, like I said, your username and your password. And you can also do this on your mobile platform, Windows phone, Android phone, iPhone, tablets, Kindles, whatever. They actually have apps, so you can access just the main website, or probably going to want to use the app. It's going to be a lot easier if you're mobile trading. But so, a lot of different trades that you can check out. For instance, you could go in here, you can go, hey, I got a setup right now. I'm looking over at crude oil as a potential trade. And so if I have a potential crude oil trade and I want to go, say, short on that trade, then I would choose whatever expiration I wanted. So say I wanted the 2 o'clock expiration, and then I look over and, see what's available. So say I see 100.2 right there. Is that trade? If I sold that one, went in, I can sell 10 contracts. and set that order in, and then go in and set a take profit. Okay, and so trade's on, and now I set a take profit. What would I set my take profit at on this trade? I'd be looking. I really want to pay attention to the bid-ask spread. So the bid-ask spread is about somewhere between $6 and $7. So I want to get in. I want to get out of this trade before there's no bid and offer quote. So notice how, like right here, I get $6. There's no bid quote. Okay, $4. There's no bid quote. All right. So I want to make sure there's a bid quote. Why? Because notice the size difference. Okay, 20 versus 1. All right. So if I'm looking at 6, then I'm probably going to go, okay, well, let's see here, $2.50 and 9. So let's take that down to $1, another $1.50 down. So that's 8. That's $7.50. Okay, so I'm going to buy back this trade at $7.50 because there still should be some size on that trade. I put that trade on. Now what happens is now I have a working take profit order. And I'm just trading premium collection and direction. I'm doing both. If oil continues to decline, I got a great trade. If oil stays where it's at, I got a great trade. If it even goes up some, I still have a great trade set up. And, looking at the chart I'm looking at right now, we check this out. Oil dropped down, came back up. It's moved its entire expected range. And then, closed on down after a strong move up. And after we're past the 75% of expected range move for the hour over here, then it does a down close with pretty normal volume. And so now I'm looking for a breakout of the low of that bar. We do get that breakout. It's moving on down. And now I just sort of let it do its thing. It doesn't need a massive move for me to take my profit. To help you to know what price would it have to get to, then one of the things that you can do is you can use the scanner to help you see. Now this is going to show you, that's it's going to show you sort of absent of time. So you have to either go further out in your binaries to eliminate time decay for like pure accuracy, over multiple hours, or you're going to have to go and you're going to have to just, let it update sort of live as it's moving. But what you can do is you can log into the scanner. I'll bring it up. I'll show you what I'm talking about, sort of seeing, where to expect that price to be at. Just always remember that, you need to look at that bid-ask spread reality, okay? Built in. So we'll go over here. We're going to click on the binary scanner that ought to load up on the page here. And let me make that a top of screen thing. There we go. All right. So crude oil. And we'll go down here to the short. And I'll show you how to use the simulator when we get back here in just a second. Okay? Stay right there.
If you're an active trader looking for that extra edge when it comes to trading and investments, then now is a great time to get a 2-week free trial to Tom O'Brien's daily market letter, Market Insights. Tom O'Brien's daily newsletter, Market Insights, comes out every market day at around 9:30 a.m. and provides Tom's daily commentary on the broad market, including the Dow, NASDAQ, and S&P, plus specific trade recommendations. There's even an update published most afternoons to keep you informed about the day's market activity. He'll give you the entry price, price target, and stop price of each stock and option trade. With Market Insights, there's nothing left to guessing. For all the details and to get your 2-week free trial to Market Insights started today, visit TFNN.com.
TFNN is excited about our new software charting program, The Art of Timing the Trade Charts. In collaboration with Tom O'Brien and using his best-selling book, The Art of Timing the Trade, Your Ultimate Trading Mastery System, David White has programmed an outstanding piece of software that will complement any trader's methodology. Using this first-of-its-kind program, the Art of Timing the Trade Charts allows you to scan thousands of stocks for Fibonacci formation setups, including Gartley's, ABC's, butterflies, and much more. The Art of Timing the Trade Charts is designed to help you when scouring the markets for stocks just beginning to form the trading patterns that many investors spend days, weeks, or even months searching to find. And right now, we're offering licenses available at only $79 a month. We are so confident that you're going to love this new charting software that will even give you a 30-day unconditional money-back guarantee. Don't miss out on this incredible new piece of software. Get your copy of The Art of Timing the Trade Charts today by visiting TFNN.com.
Investors, Taz Market Research delivers to its subscribers expert commentary on the analysis of 15 different markets each day. Get this invaluable and timely information through the daily market research videos Taz Market Research produces each day before 9 a.m. The video analysis will include reports on currencies, interest rates, indices, metals, energies, grains, and more. You'll be able to gauge where high profitability setups are in each of the markets. Receive a free 2-week trial subscription to Taz Market Research videos on the front page of TFNN.com.
Patterns, profits, and peace of mind.
Are you looking for a precision edge in the market? Something that can stack the odds in your favor? Then look into Larry Pesavento's trading newsletter.
Patterns, profits, and peace of mind.
In each weekly issue, Larry explains what's going to happen in the markets based on the pattern he sees developing and gives you actionable trade ideas based on those patterns. Plus, you'll get his detailed analysis on a variety of markets and sectors, including stocks, treasury bonds, the gold market, oil, the dollar, the Forex market, and more. You'll get access to all the patterns Larry is seeing in the markets, plus the Astro Harmonics and powerful Bradley stock market model that Larry utilizes for less than $5 a day. An extremely potent combination that will give you the edge you've been looking for. Try Patterns, Profits, and Peace of Mind absolutely free for 2 full weeks. That's an $85 value. Yours free when you register right now.
Get Larry's Patterns, Profits, and Peace of Mind.
And get the edge you've been looking for.
With the launch of Tiger TV, TFNN has brought our programming to the next level. With Tiger TV, you can gain access to each host's charts and computer screens as they host their daily stock program. Whether it's Tom O'Brien, Steve Rhodes, Basil Chapman, David White, Larry Pesavento, Andy Hecht, Victor Jones, or Darrell Martin, you can catch all of our technicians hosting their programs live and archived on Tiger TV for your viewing pleasure 24 hours a day, 7 days a week. If you haven't checked out Tiger TV, then visit TFNN.com and see what you're missing. Darrell takes your phone calls now. Toll free at 1-877-927-6648. Internationally at 727-445-1044.
All right, folks, we'll come on back here to the Diagnostic Trading Hour. So looking at oil, like I said, oil moved up, hit that range, and exceeded with the expected volume. We actually had we had a down move with the expected volume that broke that 75%, but we didn't get a break below it. Then we got to move back up where we exceeded expected volume, also that 75% mark. Then we got to move down, not a great volume bar, just maybe barely above. Then broke below, and looking at the trade. So I mean, it's pretty simple. I mean, it's just a matter of time decay and direction. If it works out, great. If not, then get out. So there's a couple ways you can exit on, a variety. There's 100 ways, you can do these trades. So the question is always, what way are you going to choose, right? So it's always easier said than done. You got to figure out what method is going to work best for you, what method works best. I mean, that question's, never ending, right? What is the actual best way to do any trade? And so basically you just got to put together, you got to get your probabilities and different pieces together. So what about stops? How would you do maybe a stop on this trade? Okay. Well, a couple things that, could be done, should be done, as a practice as you get better is when things go against you, when they go the wrong direction. If you get a confirming signal in the other direction, that's a good reason to get out of the trade. Like if you have an entry in the other direction, that is a good reason. Now, there are times where I may actually just leave both on. So, because I just see it as being, really volatile, choppy. I think it's either fly up or fly down. So there are times when I do that. When I do that, I'm usually doing like an out of the money. Like last night I did a trade, and I went on, and I want to say it was on U.S. yen, and the market was moving down, and I put on a short. And I was moving down, 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 sort of just a breakout or a, continuation. whatever you want to call it, launch trade, whatever. But basically, it's moving in the direction from the top of the hour. But then we got sort of a reversal setup and even a potential reversal entry. And so I'm looking to go the other way. What I did was actually put on one trade for like a $70 or $65 risk. The other trade had a $20 risk. And if it went either way, and we only had 5 ticks between the strikes. So if it went either way, a few ticks up or down, then I was going to cover either side's potential risk. And at this point, it was more adjusting the position on the trade. So there's, like I said, there's a lot of ways to do it. You just got to figure out what method is going to be consistent for you. And so instead of getting out of the trade and taking a $40 hit and then putting on another trade, and what if that trade lost and taking another $20 hit, what I said was I'm going to put both trades on. Now, if it expires in the middle, I do get hit. But I only have 5 ticks between them, and I do have volatility, and I do have time. So my probability of one or the other covering the other side's loss is very, very high on that trade. Every once in a while, I get caught in between, but it's rare. So on those trades, I'll even go in and just do strangles on some of those a lot of times if I see the right prices. Now, going in and looking at, like, say, the oil trade we got on, there's a couple different stop methods one could use. Like I said, we have first method is just if you got a confirming signal in the other direction. Okay, another stop method that we could use on the trade is we could go in here and we could put in one of really, there's really a few different ones. So I'll go through like 3 different possibilities. One of them is going to be a little more, I guess you could say, aggressive on your stop. Simply because by doing it, you're going to run into the problem of you're more likely to get stopped out. Okay? So, and that aggressive method would actually involve you using that stop like trailing on every bar. Okay? So you could I'm using 4-minute bars here. So you could trail on every single bar, and that could work for you. It could work without a problem. You can just keep trailing it right down. The issue is, again, just a few ticks in the other way, and boom, you're out. And yeah, you may have walked in a small profit on the trade, but you really didn't give it any wiggle room. So this is if I'd rather not win as take the chance of losing and win. Which is sort of weird. If you're going to trade, you gotta take some risk. But that is one method. That'd be in my stance, that'd be the most aggressive. Not aggressive on a risk model, but aggressive on the probability of getting stopped out model. Okay? And again, that's trailing it like the high of every stop, and that's using the indicative, not using the underlying market. And so I'd go over here, and I'd find out, okay, what's the high of this bar? It's 99.97, or sorry, 100 is the high of that bar. So it'd be like going over here and setting this at, my stop trigger is like, 100, and 1. Okay, so that would be one method of doing it. The other method, I'll go into the other 2 methods, and which one I usually prefer when we get back after this.
In quiet markets, investors search for new trading opportunities. We'd like to introduce you to a new product that provides opportunities even in flat markets. Nadex, the North American Derivatives Exchange, is a new and innovative Chicago-based exchange registered with the Commodity Futures Trading Commission, and unlike most other exchanges, Nadex allows you to trade directly through them with direct market access when using their trading platform. Nadex never charges a fee to use their platform, which even includes real-time charts and full customization capability. Nadex's unique short-term binary options allow traders and investors to capitalize on strategies even when the underlying markets are quiet. Nadex's innovation has allowed them to come up with a line of unique trading products that are unavailable anywhere else. See how it works at nadex.com. That's Nadex.com, or click on the Nadex banner on the front page of TFNN.com. Futures and options trading involves risk and may not be appropriate for all investors.
Andy Heck's powerful weekly newsletter, the Technomental Commodity Report, has delivered multiple triple-digit winning trades in recent months. And right now's the perfect time to get a full month-long trial to Andy's newsletter with no obligation to pay anything. Andy publishes his weekly newsletter every Thursday morning, where he breaks down the commodity market and provides his subscribers with specific trading recommendations based on his trading methodology. By signing up for a free trial to the Technomental Commodity Report, you'll get a full 30 days to try out this powerful newsletter service and see for yourself the types of trades Andy has recommended for his subscribers. When you sign up for a 30-day free trial, you're under no obligation to pay anything. And should you decide to continue, you'll lock in the low rate of only $59 a month. Sign up right now for the Technomental Commodity Report and make sure you're ready to catch the next big trade in commodities. For more information and to get started today, visit the front page of TFNN.com.
Darrell Martin coined the phrase diagnostic trading, and we're happy to announce that his Diagnostic Box Spread Analyzer has finally been released. The Diagnostic Box Spread Analyzer helps you easily identify the best box spreads on Nadex in seconds, plus you receive access to the diagnostic deviation levels, as well as step-by-step training videos teaching you how to trade Nadex spreads so you can quickly master the mechanics of this simple yet powerful trading instrument. By pulling live data from the Nadex exchange, the Diagnostic Box Spread Analyzer does all the math for you, calculating risk, reward potential, distance to break even for both outright spreads and spreads used to hedge the underlying market. Visit the front page of TFNN.com today to get your 2-week free trial to Darrell Martin's Diagnostic Box Spread Analyzer and gain access to the valuable information it can provide when trading the Nadex box spreads.
Who says you can't take it with you? TFNN says you can. With your mobile device and TFNN's live radio streams, TFNN has put it all in the palm of your hands. No special apps to download. No subscription fees for live radio or Tiger TV streams. We say you can.
Now let's go over to the dollar, because the dollar is going to be the generator. It is the generator of basically higher dollar, lower market. And what the dollar has done, and this whole uptrend, folks, has just gone sideways. The way it works, folks, is this.
We say you can. The Tiger Financial News Network. Smart investors and professional traders know you can. TFNN.com. Educating investors. This segment is brought to you by Think or Swim. For more information, just click the Think or Swim banner on the front page of TFNN.com.
Hey there. Right. So anyway, so we were going through several different stop methods. One of them was like putting it just like a tick above the high using the, trigger price function here and the stop trigger. Now that's not a stop order. It's not an order type. It's just a trigger that says when you want to submit your limit order, your normal limit order. But so that's one function. Okay, we just took our profit. But another possibility. There we go. So perfect call, perfect setup. Market dropped right on down. So I got to love that trade. Just right down there, called it, volume, told us everything. And we combine that with expected range. All right, so with that trade, what are some of the stops that you could have used? So a couple other stops you could have used is, one is you could have used a, like at the strike, 100.2. Okay? That would have been one possibility. And if I did that, I sort of want to a lot of times look at, like, where was that high volume high where it ran out of steam? It ran out at 100.14 on that trade. So let me see here. And so that was one trade right there. And then let me see. And then looking at, let's see, the next trade over here. So you could have used like 100.2. And right above here, so just trying to like do the calculation here. So 100.2, you could have left it at that strike. You could use it basically like at the strike. One rule I've used a lot is like a few ticks above the strike. That will add on about $5 to $10 risk, so be aware of that. Also, like right above the high, like a tick above the high before the reversal is another trade that I'll, potentially look at doing. And by putting those trades out there, by setting those risk management, that'll help you a lot. Like I said, one is if you get a reversing trade in the other direction, that's usually a good sign to get out, unless you're going to do some sort of hedge trade. And if it hits your strike, that can be another reason to get out. Maybe add a few ticks onto that. And or if you want to use that high. So that's a few different ways to do it. Personally, my personal preference is to really be looking at those highs or lows right before the entry. So if I zoom in on this trade right here on oil, and go right here and go, okay, that was my high volume breakout down. It didn't hit it. High volume breakout up. Didn't break the high of that. Then I got that reversal, 75% of the move, go short. Okay, this bar right here, the higher of the two, but really it's going to be this one. Because if you would have broke the high, you would have been looking for a potential long there. Right here, then you would have had the trade. So the strike where you could have went in and went short on that trade. And there was some good premium in there. So good trade, worked out. And so right here, went short, put the stop loss just a few ticks, right above 100.14. So you could have went 100.17. That would have kept you with a pretty tight stop loss comparison if you're doing like a 100.2, strike on there. And just, like I said, just trailing it on down was a possibility. Now, the challenge on trailing is, hey, if you get a smooth little trend like this, awesome. But if it's a little choppy, that trail can prove to be very challenging. So if it oscillates at all in the process. Now, the advantage is, hey, you know what? You're out. You're only basically saying, you know what? I don't want to make any money unless the thing's just going to go. So if you can kick me out because the thing reverses, then just kick me out. And that's sort of the reason why you trail every bar. You're like, I'd rather be kicked out at little to no loss, take on a trade that's going to oscillate. I only want the ones that are going to run. And so if I can limit my risk, and only take the runners, that would be one method. The other one is, hey, I understand the market does oscillate, especially at night. Okay? Especially at night. Post lunch hour here, we can get a lot of that. So, and, make sure you take each one of your trades. So, if you don't take each one of the trades, then, especially like you take a loss and you don't take the next trade, then you can't cover your losses. Okay? So you got to take that next trade. You got to keep going. And I see so many traders, they'll do a trade, and then they'll go in and they'll chill out, they'll back off, they'll get nervous because they lose. These are high probability trades. You go and you do these kinds of trades and you back off, you're killing your probability. Okay? I mean, you literally have to move forward. I mean, the chances of having 2 or 3 losses in a row is actually very, very low on these trades. Now, if it's like an opposite trade, I understand, that probability is a little bit different. But, I mean, if you go in and it's like short trade, then long trade, then short trade, then long, if you just keep going the trades and taking them, then the probabilities really start stacking up. So now let's look at what we got going on over here. Got a potential reversal setting up. May have a potential continuation down. Oil's moving sort of strong. Be really careful in these last 20 minutes of trying to do a what you could call a continuation trade. If you've heard some of my trainings, I'll call this a phase 3 trade. So phase 1 is where the market's like going in one direction. Phase 2 is where it reverses. You could have several reversals in the same hour. Phase 3 is where it just keeps going. You want to be pretty careful on a phase 3 trade in the last 20 minutes. The reason is because the market will often really slow down and easily will reverse And so, it'll look like it's going, and then it's just done for the hour. And I'm not sure. I'm pretty sure this is mainly algo driven. I'm going to talk to some of my guys I know that help work with a lot of the algo shops and build the algos. But I think a lot of this, really, during the last 10 or 20 minutes, you'll be amazed how much the markets usually just flatten out. And then they'll pick right back up, like new hour, let's go again. And, you may have some spurts in between. But, it's amazing. And I've noticed this pattern ever since I started really, really watching the ranges. But, notice right there at the end, it's flat. Got a little trend right here at the end, basically flat. The trend right there was at the beginning. So here we, didn't get a lot of move till about the middle, but again, at the end, flat. And so you'll notice a lot of that flat. So be careful not to get faked out. And flat can be flat. It also can be flat and reverses on you a little bit. So just be careful on those in the last bit there. And you may even, if you want to do it, if you have some confirmation, you're looking at this thing, you're like, this thing really looks like it's got the potential to pop. Then you may want to look at one of two things. One is you may want to look at an out-of-the-money trade. Okay? So, because you have lower risk. Now, if you do a continuation trade, in essence, you really are saying that you think the market's going to go. Okay? I also call this a catapult. Okay? So you're thinking it's going to go. You're not thinking it's going to go flat. So if you have that kind of conviction, you're probably a little bit more better off leaning towards a out-of-the-money trade. And if you don't feel like you have enough time for the out-of-the-money trade, which honestly, in the last 12 to 16 minutes, especially, maybe even in the last 20, I'm usually not very comfortable with doing an out-of-the-money trade just because it can flatten out so easily, even though we could still get that continuation, that strong move. I'd be much more likely. Okay, especially looking at this trade right here, we're sitting right at the 1.5 deviation level. This thing could bounce. Now, if it breaks, it's gonna break. Okay, and when I say break, and I make that sound huge, I'm talking 20 or 30 cents. Okay, I might be a lot better off going out to the next hour right now, and sort of the phase one, that launch phase, going in. And looking over here and checking out, in this case, I don't really have a next hour. I have a 2:30 because, that's the next expiration. But going in and going, okay, this is probably my better setup. Let's find a out-of-the-money, low-risk trade that we can do. What's the lowest risk we can pull this off? Here's a $60 one. That's not far away at all. That could be one that we could go for. So right there. Gives me a little more time. Versus it having to move, and what if it oscillates? And, we only got 15 minutes. So this could be more of your trade setup right here. So you're looking at that, and we just got 3 down closes. We got all 3 of them exceeding volume. We're right here, this 1.5. It's still battling this out. But like I said, if it breaks, it's really, really, really going to fly. Okay? And so on this trade, now again, I would not be surprised to see it pull back to that close to close mark. Okay, to try to run back up there, because we often see it pull back. That's why I said you got to be really careful on these last 20-minute continuation trades. If you have conviction on them, you're much better off giving yourself some time to be right, because maybe what will happen is maybe you're right. Maybe it will break out and go down. But it might do that little pullback, that little flattening out pullback part right there in the last 15 or 20 minutes of the hour. And then on the new hour, bam, it drops. And that's those trades where you're like, man, I was right, but by 5 minutes, I was wrong. Or 2 minutes, I was wrong. 2 more minutes, and I would have been fine. That's that solution. Okay? And, see, we're getting this little pullback right now. Not an odd thing to see after getting a triple down close right there. But now look what happened. Now it's that 1.5 that was before was support is now starting to become resistance. Okay, so I like that. I like that it didn't just pop right through it. At least not yet. And so I'm watching the bar, but I'm ready to go in and go, hey, I could go short on this, but if I'm going to do it, I'm not going to do current hour. Okay? If I was going to do current hour on anything, I'd be more likely, due to that up close, to go in right at the end and snag myself a quick 2 o'clock in the money binary on a buy side. So I'd be more likely to go over here and look at the buy side of the trade right up here. And, see what lines up for a good in the money one. We're at about 99.72. So you'd be looking at about 99.6. That'd be just right below this low that's been sitting there. So that'd be like your in the money trade that you could check out. Okay? As a buy trade. Going into the end of the hour. And putting that order on as, the trade you want to do. So, it gives you plenty of room compared to where it's, at. So looking at that, it's already starting to move up there. So if we get that, if it just stays flat, we got a nice little range right there. And then as a hedge, remember you had a lot of that strong down move. If you think that hedge is going to continue, you could start right now on the 230 and go short. So if either side wins, you're going to cover the other side, but if it does come back down, you got a nice head start on that short 99.50 trade to go in on. So, again, we go in and we bought the 99.60, okay, for the 2 o'clock expiration, and then we sold the, 99.50. And, you can go here, you can do live or demo or, whatever you want to. Obviously, I suggest you definitely demo while you're learning. That's just intelligent. So on demo, you'll see it. It'll be like demo right there, and you can put in. And so, really, I would say you don't want to really buy it for more than 80, but I'll throw a couple on just to show you how it works. So I'll just throw like 5 on there at the market price, and then I'll throw the other 5 on. We'll just see if it ever fills my order there. If it does, we'll put those in at 80. We'll place that order. Okay, and then close that out, and then we'll go down here and we'll look at that. Remember that sell side contract we were looking at, and we're looking at that out of the money trade, and we're going, hey, what could we look at potentially? Well, we could look at that, that 100, or that's not going to do us any good, but we got a 99.50 we could look at for the 230. That's $74.50. That's not bad. That's like a $25 risk. And so we can hop in on that right now. We can throw on 10 contracts, place that order, runs down. Then we have a nice potential trade on that one. On both of them, ideally you're going for about 15 to 25. 20 is my ideal profit that I'm going for, $15 to $25 profit on those trades. Be careful on your in the monies. I'm just this is just a list of tips today. Be careful on your in the monies going into expiration, especially those last few minutes. If you're not really confident on that trade, you should be out of that trade. We'll go over just a few more things for you when we get back after this break.
You take a hands-on approach to managing your investment strategy. You're always looking for the next trading opportunity to magnify your perspective. Direction Shares connects sophisticated traders with a powerful array of ETFs from a wide range of asset classes. The markets may go up and down, and you want tools for both sides of the trade. Discover how we can help at DirectionShares.com today. An investor should consider the investment objectives, risks, charges, and expenses of the Direction Shares carefully before investing. The prospectus and summary prospectus contain this and other information about Direction Shares. To obtain a prospectus or summary prospectus, please contact Direction Shares at 800-851-0511. The prospectus or summary prospectus should be read carefully before investing. An investment in the funds is subject to risk, including the possible loss of principal. The funds are designed to be utilized only by sophisticated investors such as traders and active investors employing dynamic strategies. Investors in the fund should understand the consequences of seeking daily investment results, understand the risk of shorting, and intend to actively monitor and manage their investments. Distributor, Foreside Fund Services, LLC.
Hi, I'm Steve Rhodes, host of the Money Master Show at TFNN.com. Eastern legend tells of a fair maiden who was offered a rare gift by the king of the land, a bag of pearls. the king promised that she could keep the largest, most perfect pearl she could find with these 3 conditions. 1, choose only 1 pearl. 2, remove 1 pearl at a time, accept or reject it. And 3, if rejected, it would be lost forever. She began by looking at the pearls, passing on many special treasures. She delved deeper into the bag, and soon the pearls were replaced with pebbles. Sadly, she went home empty-handed. Folks, replace pearls with time, because we cannot go back even 2 seconds. We live in the eternal moment of now. So when now are you going to take advantage of my offer to you, a subscription to my daily investment newsletter service, Mastering Probability, where you can experience the most incredible pearls for trading and investing, the Rhodes Momentum Indicator and Strategy. The offer? It gets better. A 30-day money-back guarantee. Don't go home empty-handed. Mastering Probability. Available on the homepage of TFNN.com.
Tom O'Brien's weekly gold letter, The Gold Report, gives complete and concise coverage of the entire gold market. Inside, you'll get Tom's commentary on gold, the dollar, the rand, the bond, the XAU, the HUI, and detailed coverage of nearly 25 mining stocks. He'll give you the entry price, price target, and stop price of each stock trade. The Gold Report is a long-term newsletter where the focus is on building real wealth through the management of a successful portfolio of gold stocks. With a lifetime of knowledge and almost 12 years of writing his informative weekly newsletter, The Gold Report, Tom O'Brien can provide you with the important market information to help you make better trades in the gold market. Don't let the next bull run in gold pass you by. To get a month-long free trial to The Gold Report, an $85 value, visit the front page of TFNN.com today.
Since 1984, Basil Chapman has been using the Chapman Wave methodology to advise traders of his expert market opinion. While originally hand-drawing charts from the late 1970s into the 1980s, Basil noticed that prices under most circumstances virtually always had a certain number of legs to the upside before declining sharply. Later, Basil found that computer software, which included the standard market technical indicators, enhanced the degree of accuracy in calling price turns, as well as market trend calls. Thus was born the Chapman Wave sequence. Using the Chapman Wave methodology along with other indicators, Basil Chapman advises his subscribers of his expert market opinion each market day with his opening call newsletter. Right now, you can get a 2-week free trial to the opening call, Basil's daily trading newsletter, by visiting the front page of TFNN.com. Cancel at any time during that trial and pay absolutely nothing. Get your 2-week free trial to Basil's newsletter, The Opening Call, today by visiting TFNN.com.
Join David White as he keeps you up to date on the latest tech stocks while he uses his Power Law Vector Indicator to identify the best trades. The Power Trading Hour, next on TFNN.
All right, folks, we're going back here to the Diagnostic Trading Hour. All right, so we're looking at this trade. We got a long on, we got a short on, we got a long going into the close of the hour, we got a short going on into 2:30 because we had a lot of strength moving down there. We've been in a downtrend. I got multiple short signals that have fired off. I mean, just one after the other, and all day. I mean, right here on oil, you just look at this all morning long, just short, all the way down, and we got volume helping us in the entire process. So I had that, that short bias, but looking for maybe to collect a little premium on the long up move. And you always got to be careful in these last 15 or 20 minutes because that oscillation and everything else. And so that's why I sort of went ahead and was like, hey, I'm going to go and put on a hedge trade. I am not going to be surprised at all if this market continues on down into the close. Okay, so let me go ahead and capitalize on that at the moment. Now, if on this trade you're getting too close, okay, and you're not comfortable with where the trade's at, then just get out. Okay, you don't have to hold the trade into expiration. There's no rule that says you have to hold. Actually, that's one of the benefits of trading Nadex is you don't have to hold the trade into expiration. So, and especially if you start doing quantity, always make sure you keep your P&L in your mind in the thought of one. So don't, if you're doing 10 contracts or 100 contracts, don't be thinking, man, that's $1,000. I mean, you're doing that a lot of contracts. It's only $10 a contract. So keep in mind, the quantity of one thing that'll help you out a lot. And, remember that you have until basically, just right before, 2 minutes before, like in basically the 57 marker, okay? Or 2:27 or whatever, basically the 7 marker right there, 3 minutes before expiration. That last 60 seconds, somewhere in that last 60 seconds, the market maker is going to pull their quotes. And so if you want to be out, if you're not comfortable, you better be out. Can you still get out? Do they restrict you from trading? No, they do not restrict you from trading. Yes, you can still get out if another trader decides to take the other side of your trade. And most traders don't want to trade in the last 2 minutes before expiration. So there's not going to be a lot of liquidity right there, okay? So just remember, if you're like on this and you're in this trade, and you're like, wow, man, I'm down $95, I'm down $9 or $7 right now. If you're not comfortable with the trade, just bail on the trade, okay? If you are comfortable with it, you're comfortable with holding into expiration, hoorah, go for it, okay? Just understand that if it goes against you, there's nothing you can do about it in those final 2 minutes. Like you can put an order in, but somebody's got to choose to take it, okay? So in this case, I have a get out at $94 order. I do not expect that order to get filled in the next minute unless we have just a massive fly up. Right now, I can get out of the trade actually at a small profit, okay? So I could exit the trade immediately, take a profit, or I can hold on and make $190. So it literally is up to me. Basically, I'd pretty much cover my cost of my risk. But this thing's going to fly around. What you're going to see is you're going to see this P&L go berserk, okay? Because when the quotes get pulled, then the P&L doesn't mean anything. Now, the only thing that matters is that indicative price. And not even just the underlying, because we're only a few ticks away, but that actual indicative price is what's going to matter. If it gets down there, it's going to nail you. And I'm doing this in demo. It shows you right there, okay? I just want you to see it happen. I want to let it unfold before your eyes, okay? And because learning it in demo is a cheap place to learn. But you'll see that's just moving right down there. And we only got 3 ticks of cushion, and you have 2 minutes where you can't do a thing about it. So what do you want to do? You got to make that call right now before it goes into dark zone. All right, go a great day, and I will see you next time on the Diagnostic Trading Hour.
David White's newsletter, The Technology Insider, is focused like a laser on finding the next big things in technology. If you had invested only $10,000 in Microsoft in 1986, you'd have been a millionaire by 2000. Disruptive technology like Microsoft's is the key to these massive long-term profits, and the Tech Insider is the vehicle from TFNN to capitalize on these opportunities. This is the go-to newsletter that identifies, monitors, and profits on mostly little-known cutting-edge companies with great long-term prospects. David's experience is as an inventor of Emmy-winning animation products for TV and Hollywood that propelled a company public. Match that with 14 years as a full-time trader, and he's uniquely qualified to guide you through the light-speed world of ever-evolving high-tech. If you're ready to ride the next big technology bull market for less than $40 per month, log on to TFNN.com and get your 2-week free trial to the Technology Insider. Get in on the ground floor of the next big thing today.
You're watching Tiger TV.